Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, February 1st, 2011. Well, the first of the month, you're seeing a lot of new money flow coming into the markets. The markets are soaring today, folks. A very, very weak dollar is helping push the markets up. The Dow right now is up 140 points. The Nasdaq is up 54 and the S&P 500 up 21.5. We have negated and then some the entire move down from Friday. Again, Egypt, the Suez Canal issues, that's all ancient history because the dollar again is dropping like a rock. That is propelling this market dramatically higher. And again, you can blame the Fed for that or give them credit, I suppose, because the market continues to go higher. Let's take a look at the dollar, the UUP, and I'll show you the chart on that. Look at this dollar. It's just continued to sink throughout the day. And notice how the direction of the dollar constantly falling is mimicking in the opposite direction the spiders, which have continued to move higher. So you can see the inverse relationship. It's a 1-to-1 almost. Down dollar, every time the dollar down ticks a penny or two or whatever it goes down, you're seeing the spiders move up equally, all right, in the same direction. And again, there's some great plays out there, some great trades out there. We're going to cover them a little bit later, but I want to fully get into what's going on here today. So again, obviously the dollar is taking a massive hit as we flip this chart up again. If you look at the daily chart, then now the dollar is moving down. What looks like the double bottom is now in range on the daily chart of the UUP. And again, the UUP is the ETF for the dollar. So watch that at around 21.90. We're at 22.16. Another down day like this puts us right there. And that at this point is what you're looking for on the dollar. And again, as long as the Fed continues to keep the dollar under pressure, and again, as long as the Federal Reserve keeps the volume light, there's no major global events, you will see this market continue to be neutral to positive. All right, we are coming into some major levels on the daily chart of the S&P, but again, you can't discount that for now. I mean, you have to just say to yourself, until we see that major global entity, that major global issue, and I'm not talking about in Egypt for one day. I mean, this shows you the power of the Federal Reserve to me. It truly does, because what you're seeing here is the Federal Reserve losing control for just one day, folks. One day. And as soon as that control was lost for one day, it was regained after the weekend. Yesterday, we started to move up slightly. And again, name it today with a massive move higher. Key stocks are leading this market higher today, namely ExxonMobil. What a move on Exxon today. You don't see this type of move every day in Exxon, folks. Yesterday, they had earnings and they were up a little bit. Today, they're up huge, up $2.87, nearing that 84 to 85 level, which is a new resistance area. And again, that's something to watch. Chevron is also having a big day, but not nearly what Exxon is having. Chevron is up $1.38. Both stocks carrying the Dow Jones Industrial Average. IBM is also carrying it up $1.50. That's nearing the $64.35 level from a fake print. If you go to your 60-minute here, take a look. This fake print up here is the overall target that I think IBM is probably headed to, and that's something to watch in terms of a possible level for a pullback there. And again, pullbacks are only looked at in terms of a day or two. You only look on a stock. You find a key level, and this is technically based now, and this is why you need to join the research center. You find these levels and you literally play them for a day or two. You can't look for more because the market is not going to give it, or I should say the Federal Reserve will not give it to you. Now, by the way, folks, it looks like the markets will close above 12,000 on the Dow, 1,300 on the S&P. The party is on Wall Street right now. And again, volume is extremely light. There's no other way to characterize it. You only have done 86 million on the SPY today, and you're up huge. The spiders are up $2.25 right now. $2.25, and you have only 86 million traded on the SPY. That's amazing, folks, to see that type of light volume and the size of the move. You know, if we were down, this is actually more than we were down on Friday to the upside, and the volume on Friday was close to 300 million. I mean, you're literally 3 times the volume on from Friday, or Friday was 3 times the volume of today, and look at the size of the move. So it just shows you how the light volume, the drop in the dollar, is really a catapult towards the upside. It's just light volume just feeds the upside. The weak dollar just feeds the upside, and that's going to continue. I mean, don't expect it to change. As long as they have control like this, it's going to stay the same. The only way it cannot stay the same and you start to have a major correction is when you have a global event that is not a one-day occurrence. If the Fed loses control for multiple days, then obviously you're going to have a big type correction. But again, that should not be anticipated. It should be watched for. Watch for the signals. And when the signals show themselves, then take it. All right, when you short something, for instance, what does our methodology dictate? It means when you're in the money by a little bit, break-even stop goes in. When you're in the money a little bit more, take half off the table and put an in-the-money stop, and then look for your next target. It'll always ensure you have a trailing stop or an in-the-money stop when you're in the money on a play, because you have to in this type of market when you're dealing with the short side. The long side, you still obviously need to stop, but it's obviously a little safer from what we're seeing right now, because the market obviously has that underlying bid based on a weak dollar and the Federal Reserve POMO. And again, some of you guys may say it sounds crazy with the POMO and such. It's actually reality, folks. Even the Fed has admitted it. They said, listen, this is what we want to do. We need the markets to go up. We believe when the stock market goes up, everything else gets taken care of. People's 401ks go up. They go out and spend money, and it fixes all problems. They're telling you it. They're using that POMO, which is QE2, in terms of a daily amount. POMOs, that's what it is. And they're using it to buy treasuries. The banks then take the money and put it into the market. It's just a merry-go-round. It's a cycle, folks. And a cycle eventually will end, but right now, go with the cycle. There's no other reason to do anything different. All right, let's talk about some other stocks today. Apple Computers having a big day. AAPL up $6. If you look at your daily chart, you're still kind of stuck in between where we had earnings on Apple and the drop and Steve Jobs left. I still think that'll be decent resistance there in terms of what you're looking at. If it gets through there, you're looking at around 350, a breakout level. If it gets above 350 and confirms, that is, and confirmation is another thing we teach in the Research Center. Again, Research Center includes everything that's listed under there at inthemoneystocks.com. But bottom line is, if it breaks out and confirms, then it could go a little bit higher. Apple, again, very, very strong. Amazon, which had pretty ugly earnings and dropped tremendously, is bouncing back a little bit today, up about $3. And again, just looking through my list, Google's up 12. Baidu had earnings. They're up $10. Very nice earnings from them. And Intel's even reversing after some ugly warnings yesterday, up 20 cents today. All right, now let's go to some other stocks. CHGS is one that we've been talking about in the intraday stock chat today. This stock is having a big-time day, up about 15-20% today on the back of some news about a contract. This is a mineral play in China. These mineral plays, remember them, they were huge. This thing went from basically $1.70 here all the way to a move to about $6 to $7. All right, that tells me, because this one's starting to bounce, that some of the other ones could bounce. So I have on watch right now XING. Same chart, but hasn't bounced yet. Also, I have SHZ on watch. Right here, it's starting to get a little bit of a bounce off the 50 moving average, maybe a small bounce in order. Watch for $6. It gets through 6. I believe that is a breakout on the SHZ chart. So these are just some of the little small caps I'm watching today. We will continue to monitor them and see how everything else shapes up, but that's what we have right now, folks. And again, it's all about understanding the markets. You understand the markets, you understand the key things that we talk about in the Research Center, you will make money. That's simple. If you don't, generally you will lose. Okay? So I encourage you all to take the free trial at inthemoneystocks.com. There's a free trial for the Research Center, free trial for the intraday stock chat. Test it out. What's the worst that can happen? You cancel it and you don't subscribe. If you like it, you stay. It's that easy. You make money, you stay. All right, folks, have a great afternoon, great evening. Let's make some more money this afternoon. I'll be in the intraday stock chat. Come join me, come listen to me, come ask me questions. I'll see you there. Take care.